Hey boys and girls, this is Tom and this is going to be a quick video about the Robinhood IPO. I took a whole day to actually analyze it and here are my insights. So first of all, don't click nothing, don't smash nothing, don't buy nothing. There's no courses, no affiliate links, no nothing. Just give me your attention. So Robinhood IPO, it's a really crazy story if you think about it. If you compare the hype that we had for the Robinhood IPO just a year ago versus what happened yesterday, this is like a Grand Canyon kind of gap.
This is the toughest one I've ever seen, Andrew.
It's still a good IPO, good results for them, but I mean, the gap is insane. So what the hell happened? So let's start with the IPO. They raised $2 billion. Each of them, Vlad and his co-partner, got $50 million each. I mean, that's a success. However, that's nearly not as close as where this IPO should have been. And as an evidence, they went for the lowest possible price of $38. The range was 42 to 38. They went for 38. That's because the market was actually acting cold. Nobody was going gaga over Robinhood.
I think that there are a lot of retail investors who, if the stock breaks the print, I think don't have more money to be able to buy. I hope that they are able to get it open at some reasonable time. The momentum here is quite strong for the company, but it is an order flow company, and I don't know what happens if Commissioner Gensler decides he doesn't like order flow companies. So I think there's a lot of risk here.
Now, they still got a 32 billion valuation, which is not a walk in the park. That means people actually think it's a good business, but it's not gaga crazy like we actually anticipated just a year ago. So in this video, I'll explain to you the good, the bad, and the ugly. Let's get started. So first of all, let's start with the basics. Obviously, we know that Robinhood got a 32 billion valuation yesterday. People actually bought shares at 32 billion, which means they see something in it. Beyond the jokes, beyond the memes, it's a good business. Reason being is that they have a lot of users, 22.5 million users. They're really nice as far as cash flow. They're generating a lot of cash, 960 million in revenue just in 2020. Already in Q1 2021, 520 million. So you can clearly see the trajectory here. Very nice. Problem is, that's just the beginning of the story. There's some major issues about Robinhood that are lurking under the hood. I just made it up. I didn't write it earlier. So check this out. The problem with Robinhood is that despite these growth rates are amazing, they have issues that people are actually aware of that's giving the company a little bit of a cold shoulder. So the first thing is that this growth may not be as sustainable in a post-COVID world. Mainly, Robinhood actually exploded out of the stratosphere when people were at home. This was the only game in town. No sports, no gambling. So basically, Robinhood became the only game in town, and that's going away. So the insane growth that they had during the pandemic lockdowns is not going to be sustainable long term. So whatever numbers we had in 2020 and even in the beginning of 2021 are going to go down significantly. And that's getting priced into this IPO. The other thing is that they have a major issue that we need to discuss. Robinhood is insanely dependent on PFOF, payment for order flow. How dependent? 81% dependent. 81% of the revenue is coming from PFOF. Now, in case you don't know what that is, essentially PFOF is when the market makers are paying Robinhood to give them the trades. Basically, when the broker brings the trade to the market maker, then you get paid, like an intermediary. The reason market makers actually agreed to pay to Robinhood instead of other guys like a Schwab, for example, is because Robinhood have the tasty trades, the ones that they really want, which means retail investors, high frequency day traders, swing traders, and you have a completely even 50-50 breakdown in buys and sells. So essentially the market makers make no effort and they just live off the spread. No risk, easy money. They just live off the percentages. However, as a market maker, when you get a block, like a 50 million shares of IBM or a Google or a Facebook or a Microsoft, then it's time to scramble. Now, that thing they don't want. But the easy, nice little trades where it's completely a break even from Robinhood, that's the one they want. And that's why Robinhood is getting paid by market makers. Now, here's the thing. This whole thing, which is essentially keeping Robinhood alive, is being highly scrutinized and regulated by the US Congress, by the SEC, by everybody and their mom. In fact, even the prospectus in the first page says that this whole PFOF model is subject to insane scrutiny and regulation and is at risk. Robinhood themselves are saying that. If that happens, that's a doomsday scenario. Essentially, that would kill 80% of their revenues. When you're so dependent on one single line of business, that's essentially a single point of failure. That's a huge issue for this company that investors are pricing in. If they had a more diversified business portfolio, then things would have been different. But they're not. They're dependent on this BS. And that's also their biggest strength, but also, kind of ironically, their biggest weakness. The fact that this brings a lot of retail investors to them and actually gets them to get paid by the market makers also creates the Achilles heel for them. That's an irony, but that's how irony works. And this by no means is the only issue with Robinhood. The other thing is that over 50% of their users are first-timers. They've never traded before, and this is where they started. The problem with these kinds of users is they mature, they get better, they want more. They want not to have their information shared. They don't want to be sold as a product, and they move on, and they'd rather pay $8 or $10 per share and get a Schwab account. So a lot of their first-timers actually mature out of this platform into a more mature platform like a Schwab or a Fidelity or Ameritrade, or they basically move out. There's a high churn rate with these first-timers who actually mature out of the platform. It's like having a YouTube channel about how to start in the stock market and just doing basic tutorials. At some point, people will get old of this and move on to other channels. You have a high churn rate when you're doing beginners only. That's the other thing that they have to solve. And right now, they haven't. Their demographic is still about 50% first-timers. And again, that's their strength, but also their weakness. And since this is a Tom Nash video, we are going to talk about financials and margins, but we're not going to do a deep dive. That's a whole different video. But I did glance at their financials. And what I found was laughable. Their margins are razor thin. And even though I expected it from a low-cost operator, like you have in the airlines, this is a low-cost operator, this was really bad. In 2020, they've made $700 million in revenues. You know what was their net? $13 million out of 700. There's not enough meat on the bone based on their current business model to justify any sort of valuation that gets me even closer to the stock right now. People that invest at $32 billion at this company are assuming the PFOF is not going to get shellacked. They assume that they will find a way to keep users on. They assume that people will still be using a lot of these retail investments even though they're going back to work and find other stuff to get their hand around. But mainly, they assume that the margins will get better. And without Robinhood actually finding a way to diversify itself out of PFOF, that can't happen. So for me, the bottom line is quite simple. I think Robinhood did a lot of good things. I think Robinhood made a lot of mistakes. I think at this valuation, given the risks I listed in this video, this is not good enough for me. I think there are better alternatives there for me. Again, just my opinion, might be inaccurate, might be wrong, might be the ramblings of a madman. You have to do your own research, decide for yourself. Allegedly, blah, blah, mother effing blah. As always, a huge shout out to the patrons and channel members. I hope you guys enjoyed this video. Let me know in the comments and I'll see you guys tomorrow.